Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Thomas Thornton, founder of hedge fund Telemetry. Thomas, welcome back.
Hey, great to be back. It's always fun chatting with you and discussing lots of topics.
Yeah, it's always great having you on, Thomas. So let's start by talking about the Fed. Last year, everyone said the Fed will put themselves in a corner. And are they at the exact same point for 2023? What's your outlook?
Well, the Fed's been painting themselves into a corner for decades now, and I think that with their hyper stimulus after COVID, they now have to figure out how to solve the inflation problem. And I think that they've been pretty aggressive, albeit they were late to the party to raise rates and to start QT. But their front loading, I think, is starting to become effective, and it's starting to show up in some economic data. It's not showing up maybe enough for some people, and I think, in my opinion, what's come back as far as lower CPI, some of the ISM data declining. I don't think the markets are really interpreting it properly. I think it's going to be a lot worse. I think you're going to see a recession. And, the Fed is great at, creating problems or solving problems by creating problems and then solving problems and then creating problems going forward. So that's kind of what they're up to right now. But, you got to remember they have, nearly a $9 trillion balance sheet.
Right.
And the markets are hoping, they have this giant hope that the Fed's going to turn around and stimulate again and cut rates and go back to the old plan. And I just think that's it's not a good thought to have. It's not a well thought out plan. It's more hope. And if that's all you've got, I think you've got other problems in the market. And we're going to talk about earnings in a little bit as well.
Yeah, before we started recording, you wanted to talk about Q4 earnings and what you're seeing there with the big banks. Can you tell us your outlook there? Because that's super important.
Right. Well, the Q4 earnings start Friday the 13th.
Nice.
I know, ominous. And you have all the big ones reporting, and I think you're going to see the banks come in with just lukewarm earnings. We've already started to see. We're monitoring. Some of the estimates are starting to get cut for the big banks. It's funny because the big banks cut numbers on each other, sort of, ahead of their reports, and then if they blow them out, then it's like, wow, aren't we great? So I think that I know, but I think it's important because the Fed really benefited from higher interest rates. Net interest income was really strong, and now with lower rates, that might be peaking right now. And I don't think trading's been all that great. I know investment banking has been horrible. I
Right.
don't think there's been a quarter like this for investment banks in quite a while. Goldman Sachs is not that far off from its 52-week high, and their earnings are down 40% year over year.
Jeez.
So it just, what happens is a lot of these banks will, go down to book value, which I think Goldman's book value is around 300, and then it goes back up and comes back down and finds support. So I'm a little concerned about that. And banks aren't necessarily a great place where you want to be long going into a recession. So I think that it's going to be really tricky. And again, I think that a lot of tech names have been beat down pretty hard, but I don't think their numbers have started to improve. We just saw last night in Korea, Samsung came out with horrible numbers,
Yeah.
and they blamed phone sales and bad chip sales. I mean, they have still huge inventories of computer chips. And today, after some weaker than expected ISM data, all the chips are up. And I just think that it's tough when you see stocks go up into numbers, into earnings reports that may fall short, because
Right.
then you squeeze the shorts out. And I don't think there's a lot of shorts in the market currently, but you squeeze the existing shorts out, and then if the numbers aren't as good, you could have a vacuum lower. Real surprise if the numbers aren't as good as with the stock prices lifting into those reports.
Now, Thomas, like how bad do you think this recession will be for 2023? Do you think it'll be like massive deflation? How bad do you think it will be?
Everybody's got, it's either, you're in the soft landing, mild recession camp, or it's going to be, hell on earth. And, I'm kind of in the middle, but I think the risk is more that it's going to last longer
Mm,
than people expect. And, we still have unemployment at 3.5%. And that's a very positive number the Fed wants to see unemployment go up, but they got wages to come down a little. They're threading the needle. And I wouldn't say that they should ever declare, a victory in this, keeping inflation low and wages coming down. But I think you're going to see unemployment go up. And once it starts to go up, it doesn't go up for 2 quarters. It goes up for 4 to 8 quarters. And we could see unemployment go up to 5.5%, maybe 6%. And that's sort of normal for a recession. It could be a lot worse if there's some, you know, catalyst, something breaks in the markets, the economy, war, whatever. But I'm not promising that or hoping for that, obviously. But I think that my view is that it's going to be prolonged, and it's not going to get over as quick as some people want. Even if the Fed starts to cut rates,
right.
I mean, people are hoping that the Fed pauses, and that's going to be bullish. I don't think that's necessarily bullish. It goes into my more prolonged recession type thing, even if they halt and just pause here. But even if they cut, historically, when they start to cut, the economy's in a free fall, it's in a recession, and it takes time for everything to wind out. And basically, the stock market tends to go lower before it goes higher until the cuts get into the economy. And we're just doing the same thing again. They create a problem, they fix a problem, they create a problem, they fix a problem,
Right.
and it's just an ongoing cycle.
Is peak inflation here? What's your outlook for 2023? We were speaking a little bit about that before we recorded. Is peak inflation here, Thomas?
Yeah, I think it's possible. We saw basically peak inflation late last summer. I will give Joe Biden credit for getting the price of crude down. Not a big fan of any politician, as you know. But the bottom line is, when you release half of the SPR, you're gonna see prices go down. The problem is coming when they start to refill it. It's kind of like he's going to go into the Chicago oil pits with a post-it on his head saying, "I need to buy 200 million barrels," and the prices are going to go up. So you have that risk again of inflation coming back.
Right.
With that, the problem with a lot of inflation and with what the Fed's trying to do is the Fed is raising rates. They're doing QT. What they wish they could do is sort of use a sniper rifle and hit food costs, labor costs, and rent and owner's equivalent rent. You can't. You're going to have to use a shotgun, and a lot of people are going to get shot. And it's just, you can't use a sniper rifle in this circumstance. Again, I think it's going to be prolonged. I think it's going to be a difficult time ahead. And we're so used to buying stuff on Amazon where we get it the next day, and people want inflation to go away and the markets to go up just so everything's copacetic and nice. But I think it's going to take some real time. And that's my view on inflation. I think the sticky stuff, rent, is going to stay elevated. Food, I think it's still pretty high. And, labor costs are starting to come down a little bit, but I don't think they're down enough. And you don't see unemployment going up enough to where it's in balance. So I think we still have the Fed there. And, one thing also, the Fed, they don't want to repeat the problem that Arthur Burns in the 70s did, where he basically stopped raising rates, started to cut rates, and then had to go back and, get
So they,
back
they don't
into
want to
it.
do it too early, you're saying.
Yeah, and I think if anything, if they just were starting, continue to raise rates by 25 basis points, they're, in smaller increments rather than the
Hmm.
75 or 50 basis points that we've seen. I think if anything, it just gives them more time before they have to they're forced to, pause or cut rates even.
So do you think they move too quick in your eyes?
Do I think they will move too quick
Or do you think they move
when it
like,
comes to
do
it?
you think Powell has moved already too quick and moving interest rates this fast and they should have went slower to buy themselves more time?
No, no. I look, I think they were late to the party to
Right.
raise rates. I think they were a good three more than 3 months late. The problem I see is basically, well, actually, I'll give them credit that they did have the balls to go 75 basis points, multiple times in a row to front load that. I think that's important. I think the terminal rate, I think estimates are still around 5% on the Fed funds rate. You've never seen the Fed stop with the CPI above the terminal rate or the Fed funds rate. So I think you have that dynamic that you have to see inflation come down below that level. The risk is that earnings continue to sort of slow down because we continue to have high rates. It's not going to be a quick turnaround, liquidity surging into the market at all.
With all the chaos in the market, where's Thomas putting his money? Give
Well,
us
I run
give
a
us your
long
tips.
short. Yeah, I run a long short portfolio, and so I'm set up net short today, and I have the market sort of running into my face right now today. That's my longs are working. I
That's
got some
good.
working.
That's good.
But I still think that if we have the market continue to move higher into earnings, I think that is going to be a real concern. It's like, again, it just raises the bar for those companies to really beat or match numbers and give decent guidance. This could be a time this quarter where we have a lot of companies that say, what, we see earnings decreasing the next quarter. And Q1 is always sort of a difficult quarter as well.
Right.
They if it's down, they usually, we had weather problems. Well, weather's been pretty nice so far. We haven't had too much negative weather on the East Coast, at least, ex Buffalo, I guess. But so where am I positioned? I I'm short Apple. I'm short some tech names. I'm short some banks. I'm short Goldman Sachs. And I also I'm short gold. Am I allowed to say
No.
that?
Yeah, you
Yeah,
are.
yeah.
That's okay.
Well,
Why?
so
Why are you short gold?
okay, well, it's not personal, it's technical here. Sentiment that I track has seen it become very elevated. That's one thing. And the other is I use DeMark indicators that work well at exhaustion levels, whether it's on the downside, which we had buy signals on the downside recently, and then on the upside. And when you don't have them on your screen, everything looks like it's going to break out or break down. But what I like about them is that if I'm wrong, and I could be,
Hmm.
it affords me the opportunity to see that I'm wrong, and then I can stop out with nominal loss. It's not going to wipe me out. But I do see those signals starting to develop right now, and
Interesting.
on top of it, or actually conversely, I'm starting to see signals with the US dollar and dollar crosses that are starting to show up. We had the dollar top with DeMark signals, sell signals. Now we're starting to see those start to develop as buy signals for the dollar, and
Interesting.
the dollar crosses could start to come down. It's not today. Today's been risk on, and when you have risk on, the dollar goes down. That's
Hmm. And we're
game
recording
plan.
this as of January the 6th, so everyone knows. But Thomas, thank you so much for coming down to Wall Street Silver. We'll put all of your social media in the description below. And where can people contact you for, you said you had a year-end review. Where can they see that?
Well, my site is Hedge Fund Telemetry. You can find me online. There, we don't do trials anymore, but we do offer a discount for our yearly rate,
Nice.
250 off. Was told that our code is going to end. It's 2022 is the code you put in,
Okay.
so you get a discount on it. I'm also on Twitter at TommyThornton.com, and I'm also short Tesla still.
You're still short Tesla.
We usually talk about that one,
A
but
lot of people saying they're going long now because it got beat up quite a bit.
yeah, their fundamentals are breaking down. It doesn't look good,
Interesting. Interesting. Well,
but
thank you so
my
much.
short, I'm short from 280, so it's not like,
Oh, nice.
I'm not
Thought you're
not
short
too
from
worried
here.
about losing money here. But
Okay, that's good.
anyway, yeah, you can find me online. I'm pretty easy to get in touch with, and um, that's that's it. I'm always online. My wife will tell me, put down your phone.
That's awesome. Awesome. Well, we'll talk to you soon, and hopefully we can do another update within the next 2, 3 months.
Sounds great.
Awesome. Take care, everyone.